Are they regulated?
No, they're an international agency. There's no direct regulations internationally or in the U.S. specifically targeted at sovereign wealth funds. There just isn't an agency for it. Inside the United States, our laws or our regulations aren't targeted at the category of investor, but the nature of the investment. So we don't have laws saying sovereign wealth funds can do this or that, but we do have laws governing foreign investment inside the United States.
Given the growth in sovereign wealth funds, are there people who think, maybe we should start to regulate, maybe there should be some international standards?
There's a lot of discussion that's going on. One group, the International Monetary Fund, the IMF, has been asked by the United States, by Europe, and some other countries to look at setting up best practices. Since they don't have regulatory authority, what they're trying to do is meet with the leaders of the sovereign wealth funds and come up with policies, ways of conducting business that all the sovereign wealth funds would adopt voluntarily in order to make people feel more comfortable with their investments.
And is this something that's likely to pick up steam, or is it just
It's a difficult process between them, because on the one hand, they want to be able to invest like private investors so they can make a higher rate of return. But they're also very leery of being too open or too forthright about what they're doing. If I were investing in the stock market, for example, I wouldn't necessarily want to tell Wayne in advance what I'm planning on doing. So as a result, they want to have disclosure or information. Transparency is the terminology, but not too much. The head of the Chinese sovereign wealth fund said that if they're too transparent, quote, they will eat us up like wolves. So
that's an image. Go back now to something that you brought up, and I want to open it up to both of you. You mentioned that, if they want a higher return from T-bills, they're moving into other things like Morgan Stanley. This is not just an economic implication. This has some serious political implications. So the buying up of pieces of U.S. companies or other companies. Can you talk about that issue a little bit?
Well, so far the Chinese haven't really done too much in terms of moving into corporate assets, mainly because of the Unocal problem that happened a few years ago when they tried to buy a major U.S. petroleum company, and there was a huge backlash from Congress. So the Chinese are being very, very cautious and very careful on that. At the same time, with the creation of the sovereign wealth funds, there was great fear that there was about to be a huge shift in China's holdings. In fact, maybe even dumping U.S. security holdings and putting them in other assets, which could hurt the U.S. economy, hurt the U.S. dollar. And in fact, the Chinese have not done that yet. They were starting in March of this year, beginning to sort of slowly reduce their holdings. But interesting enough, in December of 2007, they increased their Treasury holdings by about $19 billion. And that was the largest single country increase for that month. So even though it looked like the Chinese were beginning to pull back, all of a sudden, December, boom, they seemed to get back in a big way.
So the speed with which they would take their holdings out of U.S. Treasuries, I imagine, would be very important.
That's correct. If there's great fear in the United States, and a lot of this has to do with political issues. The United States, especially the Congress, is attempting to put a lot of pressure on China to appreciate its currency. And some of the Chinese policymakers have said out loud, why can't we use these large holdings to sort of put pressure back on the United States? And for example, in August of 2007, there was an article in a British newspaper that they interviewed supposedly two Chinese major representatives of a think tank, and they said, why don't we just threaten to cause a dollar collapse, just sell all of our holdings if the Congress wants to go ahead and pursue this this kind of legislation.
Theoretically possible?
Theoretically possible, but not practical. Because first of all, for China to sort of unload their assets all of a sudden, first of all, it would increase the value of whatever assets that remained, one. And second of all, it would potentially cause a serious economic decline in the United States. That's not in China's interest. China's interest is to see a strong U.S. economy, especially since we purchase almost a third of their products. So it's not in China's interest to do that. I think it's maybe sort of political hardball. They're seeing the U.S. Congress threaten them with possible sanctions on their currency, and they're saying, look, we are helping to keep your economy secure with these purchases of your securities, and we could also pull them back if you're not happy with our current economic policies.
But
Kerry, if I may.
Sure.
Going back to sort of that point you were making about effectively the motivation behind these sovereign wealth funds or China as an investor. And as Wayne is indicating by his answer, that there's a concern that sometimes they will do things with their money, their $1.5 trillion dollars, for political purposes rather than investment purposes. And sort of the notion is that a private company or an individual investor, we know their motivation, we know what they're trying to do. They're trying to maximize their profit. In the case of a sovereign wealth fund or China in general, we're not sure what their motivation is for their investment. However, there's an interesting wrinkle about that. Before China's sovereign wealth fund was started, they invested $2 billion in Blackstone, a US financial company, holding company. They've lost money on that. That was considered a proper commercial investment. It was done for profit purposes. Subsequent to that, they invested several $100 million in a new company, a new Chinese company that was offered on the stock market in Hong Kong. And they've earned like a 30% rate of return on it. But that investment was supposedly for political purposes. So one of the things that makes this complex is that when they're motivated for commercial purposes, they seem to lose money. And when they seem to be motivated for political purposes, of the sort that Wayne's talking about, they seem to make money. So there's also the issue not just of why are they making the investments, but actually what the impact of the investment might be.
do we know also where the direction for this investment is coming from? It's a sovereign wealth fund, an independently run group. It has a CEO or something like that. Is it taking its direction directly from the State Council? Are China's senior leaders weighing in?
It's a separate corporation. It has a board of directors. It has a CEO. It looks like a private company in many respects. However, if you look at the board membership, they come from key agencies inside the central government of China. It also reports directly to the State Council, the highest political body inside China. So in some ways it looks like it's a government agency. And then within China, you have tensions between these different government agencies. The People's Bank of China, their central bank, may have different desires or goals than the Treasury Department or their equivalent of the Treasury Department, and different goals from the Commerce Department. And there appears to be some indication of disagreement about what they're supposed to do.
So bureaucratic infighting about how to use these funds?
Exactly. And when you get down to the $70 billion of where it's going to go internationally, going back to Wayne's point, there seems to be indication that China is being sensitive to international criticism. So one of the things they're considering right now is basically taking that $70 billion, cutting up into different chunks, handing it to fund managers, and saying, you invest it. And effectively the CIC management will just evaluate the fund managers and how successful they are.
Now, these would be foreign fund managers or Chinese fund managers?
Well, that's also not 100% clear. But they've gone around the world. They've gone to London. They've gone to New York. They've gone to Japan. And they've gone to Hong Kong. They've gone to Singapore. And everywhere they go, you get these private fund managers and large corporations like Morgan Stanley, who, by the way, they purchased part of, coming and saying, we can help you manage your funds.
We can help you lose money, I guess.
That's exactly. That's a possibility.
Well, we're talking about all of this. Doesn't it all sound good for the United States? I mean, we've got, China's sovereign wealth fund interested in plowing money into the U.S. economy. We have low interest rates because of Chinese investments in U.S. securities. It seems all good. Is there a downside?
The downside is being dependent on foreigners for savings, and it's not just China. It's across the board. As long as the United States continues to have such a low savings rate, it's going to need to borrow from overseas. And if one day foreigners lose faith in the U.S. economy, if they start pulling their funds out, then the U.S. economy suffers possible danger, and that is a depreciating currency, which we're already seeing. The U.S. dollar is at an all-time low against the euro. We're seeing that. And in addition, there's always a possibility that if foreigners do start to pull their money out, try to put it somewhere else, that it's going to force the U.S. to raise interest rates. And obviously that's not good for the economy.